Welcome to Wealth and Wellness with Grace Nabasabla.
So I'm going to make it super simple since it's just you, okay? Do you, have you been a veteran or, okay. So we're not going to talk about VA, but just know that VA is 100% financing for people who are entitled, which are veterans. We do go down to a 580 credit score on that, which is super important, and we'll go up to $2 million at 100% financing. I did a house in the Garden District, Baton Rouge. It was 1.1 million, and he did a VA loan and was 100% financing. So that's pretty cool. Next is rural development. It is my favorite program. You know that I love rural development. I actually was blessed and got to accept the award for top rural development lender in the nation in Washington a couple months ago, and I have a heart for rural development. On here it says 640 and low is 620. We go down to 620. In some cases, I'll even go down to 600. I also do double wides. I'm one of the only lenders around here that does double wide mobile homes. USDA, there are rules. It has to be a 2006 or newer, but it's a great program as well. When we talk about 100% financing, let me clarify that, because on one of Grace's pages, and I love this, by the way, Grace, it says don't forget about closing costs, right? 100% financing is not closing costs included. Closing costs are going to be title fees, lender fees, your insurance of 1 year, because so if you have car insurance, do they cover you all year and say pay me later? What do they say? Give me the money. So that has to be paid up front. So all of that, so let's say on a $200,000 house, we can have closing costs of $6,000 or $7,000 simply because all of that has to be paid up front. So that's why you have a great real estate agent that if you don't have that money, she can negotiate that in there, okay? Rural development also has a little caveat that I love. If the house appraises for more. So let's say you write an offer for $250,000 with no closing costs, like you're gonna pay your own closing costs. So it's 100%, but you'll pay the $6,000 or $7,000, whatever it is in closing costs. But the house then turns around and appraises for $208,000. You can, on rural development, you can roll that closing cost in, okay? And every every $10,000 you finance is only about $55 to $60 a month in payment. So that's why I tell people, even if you have a lump sum to put down, let's see how we can get you in the payment you want with still holding your cash so that you can do repairs or upgrades or anything you need to the home, okay? So that's rural development. FHA is the most popular program in the United States because it's more lenient. It allows 3.5% down. We go down to a 580 on FHA, and it's just a great program. It's 3.5%. Again, your closing costs are separate on there. It also, debt to income, that means you'll hear lenders say DTI. Have you ever heard that term, debt to income? And people are like, what does that mean? That's when you take your monthly debts divided by your monthly income and you get ratios. FHA allows for much higher debt to income ratios than rural development does. Next is conventional. It starts at 3% down, but there are some rules on that. Most of the time conventional is 5% down, but you can get 3% down depending if you qualify for that. Conventional is going to be for higher credit scores. It will go down to a 620, but there's mortgage insurance, and I'll explain that in a minute. That's going to be higher if you have a lower credit score. And then, of course, VA we talked about that. That's for veterans. So when you talk about a payment for a mortgage, it's made up a lot of different things. Principal and interest, which is based off your interest rate. Taxes, which are determined by the parish that you live in. Homeowner's insurance, which we will help you shop that. That is kind of overwhelming for a homeowner. So we always ask you when you get a contract, do you have any insurance agents that you want us to shop with? And if not, we have many that we shop with. We can't legally pick your insurance, but we can get you the quote so you can make an educated decision, because you don't want to have to call around and try to find that. That gets super difficult. So it's made up of taxes, insurance, principal and interest. Then if you have flood insurance, That's another thing. When you're pre-approved, the lender is going to tell you what your max is. But if you find a house that's in a flood zone that's in that max, you need to check because that's normally not including flood insurance. And last is MI, mortgage insurance. What that is if you're putting down less than 20%, you have to have PMI. All government programs have mortgage insurance. That just protects the lender if the loan defaults. So, interest rates, really quickly. So we went from rates in the 3s to rates in the 5s, rates in the 7s. Now they're saying, anytime you have a recession, you usually have lower interest rates. The government's really not convinced if we've hit a recession yet or what's going to look like, but we are seeing all the experts say that by next year we should have rates back in the 5s. Do I personally think we'll have rates in the 3s again? No, it could be years off. What happened is we had a pandemic. The economy went awry because people lost jobs. So to stabilize it, a great way is to keep the housing market strong. So they dropped the interest rates. Well, now they're trying to recover, right? Now everything's changing. And so we're in a market like we've never been in. So the truth is, and I'll just shoot it like it is that people will go pay 15% to buy a car, and then if they're paying 6 or 7% on a house, they don't want to do it. Well, a house is an appreciating asset. So even if you paid 7 or 8%, you're still it's gonna appreciate over time. Also, a mortgage, you only pay for the days you use it. So if you live in the house only for a year, you're going to only pay interest on that loan for a year. You know how when you go to a finance company, we've all done it. I did it in my, early years. And when you go to a finance company, like if they give you $3,000, you get that bill and it says $7,000, right? Because they add all the interest up front. Mortgages are just interest charged per day. So most of the time, your first house, do you know that most people only live in their first house 7 to 10 years? So you're worried more about payment than rate. The only time you really specifically worry about rate, and I'm not saying it's important, but I'm saying there's ways to manipulate it, because if you pay one extra house note a year, you can cut 5 to 7 years off of your mortgage. So you won't pay the interest for those 5 to 7 years. So there's ways that you can save interest even if the interest rate's a little higher.
And also, there are refinancing once rates do go back down, because real estate is a very cyclical industry. So that means it goes up, it goes down, it goes up, it goes down. So will it ever get back to the very, very low 3s? Probably not. But it can be lower than what your interest rate would be if you pull it today.
Yeah.
So refinancing is always an option. I just want to keep that.
And most lenders are going, and when you refinance, the title company will reissue the current title policy, so that'll save you money. Most lenders like me are going to waive most of the lender fees when you go to refinance. So there's options there. In fact, that's a new push you're going to see coming out soon. Lenders are going to be like, I'm going to waive my fees for refinance. I always say, if it's your time to buy a house, and real quick, if you give me permission, I'll share my story of buying a house.
Go ahead.
But in my early 20s, I made some really bad mistakes. I was on drugs. I had a baby early, messed my credit up, thought I would never be a homeowner. I got married to a wonderful man, and we lived in a double-wide mobile home on land. We were super happy. And then in 2011, 2009, I think, 8 or 9, I was working at a bank and I was searching on the internet looking for something, and this house popped up. And it was like my dream house, like everything I ever wanted. Well, it was way out of my price range. Back then it was, a lot of money. I'm not going to say it on video, but it was a lot of money, and I thought, okay, we'll never do that. And my husband and I used to ride by it on Sundays, right? We used to ride by it and dream. And we eventually got pre-approved to buy a house. Well, there was a house that I thought that we wanted. And I loved the house, and then it fell through. And I was devastated. And I thought, never gonna own a house, what's gonna happen? It wasn't the right house for us. And in 2011, I got this job as a mortgage lender, and our income situation changed, and our dream house went back on the market. And the end of 2011, we bought it, and that's the house that you come to.
Wow.
And so I lived in a double wide for 10 years, and we saved money and we prepared. And then, like I said, my first house that I wanted to buy, and it wasn't 6 months before we got our dream house when the other house fell through. And I passed that house now, and I think, thank God that did not happen, because my house is my dream home.
Mm-hmm.
So whenever your timing is, you'll know it. And whenever you find the right house, you'll know it. And just don't give up, right? Because I think everybody's been at a point where their credit wasn't the best, or they made some bad decisions. You can recover, and that's what I want to talk about next is credit repair. We have a fully free credit improvement program. So, and we won't ask you about your situation because that is personal, and I'll give you my number if you want to talk about it. But if anyone that you know or you feel like you want your credit pulled to see where your credit is, like, hey, I think I want to buy, I'm not sure, have to complete a full mortgage application because that's how we pull your credit. If your credit score is not there, we have a full team. All they do is credit improvement. So they will pull your credit. Within 48 hours, they will send you a full plan of what to do. They charge you nothing. They will stay in touch with you every month, make sure you're on track. We will stay in touch with you. You would be surprised. We have had, right now, I think I have over 1,400 people enrolled in my credit improvement program. We don't call it repair because we don't charge for it. It is how to improve your credit, right? But it's a great thing because even if you're ever going to buy, even if you say I might not be 5 years, you need to know what a mortgage lender thinks of your credit, like what we see, because that's totally different than car dealer or anything else that you're going to have pulled. But once we get that plan, we had someone who had a score in the 4s, and she is now a homeowner. We've had several someones with scores in the 4s, and they are now homeowners. It's about what she said about the timing, and it's just about making your mind up, right? If you think I'll never improve my credit, everything gets better. And time is what heals credit. But the reason we encourage everyone to have their credit pulled is because there may be something you didn't know about on there. There may be something that we can have fixed for you. There may be something that we can see that'll get you a better score to get you a better rate. So we'll tell you all that. So not only do we help you buy homes, we also help you if you need credit improvement. So that's pretty much my spiel, Grace. Do you have any questions about all that?
No.
And I'll talk about Grant next. Grant is we have CAF and LHC. When we get you pre-approval, let you know if you qualify for a grant program, but we'll also let you know about the regular program. So there's a misconception that grant is a standalone loan. It's not. It is tied to one of these loans. So we'll either do an FHA loan and tie a grant to it for the down payment, or we can do an RD loan and tie a grant to it to pay you some of your closing costs, right? Or we can do a VA loan and tie a grant to it. But the grant program is ran by the grant entities themselves, so CAFA and LHC. And what we're seeing right now in we call it a volatile market. That means rates are a little higher, the market's been recovering and things are going up and down. Some days we don't even have grant programs available. That's not just Fairway, that's any lender that you would go to, because the grant program is not issuing grants that day. So we may pre-approve you for a grant, but we will tell you and your agent, hey, we haven't had availability maybe in a couple weeks, but we'll let you know once you get a contract if we get it. So I always tell everybody, save what you can, but there is no rule that you have to have $10,000 saved or $20,000 saved. I've had closed loans where people only have a few $100s in the bank, but every loan profile is different. Some people are required to have an extra, it's called reserves. So if your payment's $1,000, we may say we want 3 months reserves. That means $3,000 in an account, right? Every loan is different and you won't know that until you apply. But if you do apply, if you're watching this and you do apply and you need credit help, we will help you at no charge with our credit improvement program called Credit Tool. I think we just got through a lot of information, right?
That's very informative.
Information overload.
Yeah. Do you have anything to add?
No. So just to explain title just a little bit, because it is a part that a lot of people don't really understand. They're like, oh yeah, I'll go with whatever title company my realtor recommends. And typically, the realtors have the best, I guess, thought on title companies because they work with us very often. But what title does is basically we'll get the purchase agreement for your home after you have both parties have signed and agreed, and then we're going to get information from you, from your sellers, about the home itself, and we're going into the history of the home and the land that it's on. So we're going into the courthouses, we're seeing if there's any liens, anything that will be transferred over to you as a buyer with the home. Because whenever a seller sells it, just because if they have a lien on it, that lien's going with the home because it's tied to the property and you're purchasing the property. So we're making sure that title is free and clear for whenever you purchase your home, so you know that that home is 100% yours and that you don't have anything to worry about on that accord. Because let me tell you, there are some things in title that gets missed. Courthouses, don't record things properly. There could be anything that can come up on a home whenever it comes to name variations or things like that. So you really want a good title company that's going to go in and make sure they're doing everything properly and super particular about how they look things up in the courthouse. So we will be asking for some very personal information. You're going to get a call from us asking how you spell your first name, your middle name, your social, your marital history. I mean, down to the nitty gritty. But it's all so that we can find you in the courthouse and make sure that you're clear, your home is clear, and the seller is free and clear to sell the home.
I also want to add this in case you don't know or anybody watching. A lot of times, so there's when you close on your home, you're going to have lender's title insurance and you're going to have owner's title insurance. Lender's title insurance, you don't have a choice about. That's going to protect the lender. So just like she said, if there was an error 15 years ago, something comes back, we're protected. A lot of times, people want to drop the owner's title because they say, well, that's less money, have to bring a closing, or even lenders. I've seen other lenders that they'll say, well, just don't get the owner's title. Let me tell you this, owner's title protects you for the life of the loan. So usually, always, you get a discount if you buy owners and lenders, and you have to have lenders anyway. And we're not talking about a lot of money, and I'm not going to quote an amount because everyone is different based on the sales price of the house. But people think, well, I don't need owner's title. Let's say you hit the lottery, okay, and you pay that house off, and I'm out of the picture. That's going to protect you. And I worked in a little town called Greensburg, Louisiana, and I have seen many cases where people, I wasn't in mortgages, but I worked for the bank, and we did land deals and all that. And when title companies go back 50 years, you would not believe what they find. Let's say that you buy a house that's sitting right in this neighborhood over here. This is an older neighborhood, okay? And you buy the house, and 10 years later, somebody comes back, let's say 5 years later, and say, that was my grandfather's house. The succession was done incorrectly. I was an heir, and I was entitled to it. If you don't have title insurance, then you have to fight that in court with your own money. If you had paid that, let's say a few $100s in title insurance,
we fight it.
They would fight it.
And we pay it off as the title company because we didn't find that error in that incorrect succession. And you'd be surprised the amount of things that come up. It's whenever especially because Louisiana is a
community property
state. If say a husband were to purchase a property without his wife's knowledge, that wife is still entitled to 50% of that property. So whenever it is sold and the wife does not sign, she still owns 50% of that property.
She's coming to you.
No matter who purchases it.
Yeah.
And this has happened. We actually had something that was a property that was sold 3 times before we caught the wife that had never signed away her portion. So all of these people only own 50% of their home.
Wow.
Yeah. And I'll tell you this too, also, it's kind of like having flood insurance, right? I was so mad every year. Sorry, Andrea, my insurance agent. I was so mad every year that I had to pay flood insurance. I mean, I was so mad. But in 2016, when the flood happened and I got 4 foot of water in my home, let me tell you something. I was never so happy to have flood insurance. So insurance is a pain until you need it.
Exactly.
So I always say that about title. You may pay that few $100s and you may never need it, and that would be a blessing. But when you need it, I can guarantee you court fees. The recording alone of whatever you need to record it for that is going to cost more than title insurance. So I like to say that on camera because I don't think lenders speak enough about the importance of owner's title, and you should never forego your right to purchase that.
And the one last thing I would say is that owner's title is a one-time title insurance.
Yeah.
Like it's not an insurance you pay every month. You pay it one time, done, and it protects you for the life of the time you own the home. So that's all I have to say about that.
That's very good. Yeah. I
Those
just don't
are
think
great
people
points.
talk about that
Exactly.
enough.
Yeah.
And people think, well, they need $300, they are $300 short for closing, let's waive the owner's title. But that is affecting you for the life that you own that property. What's great about it as well is, let's say you have children, and that owner's title covers the whole time you own that property, right? The whole time that you own that property. So I think it's super important.
Yeah.
I know we've thrown a lot at you today. I'm gonna turn it back to Grace.
Oh,
Is there
thank you.
anything else that I missed that you want
No,
to talk
you
about?
all touched on very important points. Thank you
Everything,
for
yes.
bringing everything up. But definitely, insurance is something we always need.
We always
we
need
don't
it.
want, but we need.
Whether
So
it's
that's
homeowner's
huge.
insurance or whether it's
Exactly.
title insurance, it's so important because a house is your asset.
Mm-hmm.
And I can tell you from having to redo mine after getting 4 foot of water in it, I'm so glad I have insurance. And now when that premium is due, like it's due this month, I had no problem paying it. My flood insurance will be due soon. I will write that check. There is no problem whatsoever with that. So
Yeah, thank you. And the last thing I would share would be touching on fears. When we start this process, sometimes different people have different fears. And so we can share a little bit about fears. I don't know if you all had any fears when you started.
Always.
I didn't know what I was doing. And besides, where I come from, you really have to have all your money before you purchase anything.
Yes.
So everything is all about having the cash reserves before you can get it. So when I came here and I found out that I could actually purchase a home with limited.
Wow, so you can't purchase a home in really? You have to pay
The
cash.
certain parts of Africa, because where I come from in Uganda, I guess I'm used to that, the cash now. If you needed a car, you have to have all your money for that car. You need a house, you need to have enough funds to purchase that property.
Wow.
And so I came with that mindset, come to find out that I could put 3.5% down
Or
for
zero in some
everything,
cases. Yeah.
and 0%.
Yeah.
You see, so that was a big wake up call.
Yeah.
So it kind of like helped me with that fear of never having enough money,
Yeah.
because that was always the fear. I was making minimum wage, not making a lot. So savings was not a thing.
Was not a thing,
Investing was even harder.
Yeah.
So I made sure once I found out that all I had to do 3.5% or even 0%, I had to get the other things in place. And still the fear of actually doing it takes a lot of you changing your mindset and your habits and your self-sabotaging behaviors. Because if you have something out there that you're doing that you know you're not supposed to be doing because you need to get this home, you have to figure that out. So do you have any fears that you think of?
I think we said them.
Well, I'm at a good job right now, but I don't know. The people might challenge me. I don't know. I guess I have to be disciplined, in my work area. But I think I can, because the pay rate and all that, I think I can manage. And I don't know if I think I can.
Yeah, well, I think it's, it's so, we all have fear. I think I always say you're usually going to pay either to rent or you're going to pay to buy. So either way, you're going to pay somebody to live in a home, right? You're going to pay somebody for the roof over your head. So of course, in this economy, it's always scary to make a purchase, but again, it's appreciating asset. And I think whenever you really live within your budget, that's what's important and that's why I'm so adamant about telling people, figure out what you want to pay before you even call me. Now I'm going to help you, but the reason I say that is what I'm looking at is gross income. You don't bring home gross income, do you? You bring home net income. You also pay a cell phone bill that's probably not on your credit. You're going to pay utilities and you're going to pay electricity, you're going to pay water, all those things, right? You may pay other things that you don't have a bill for. Someone may have children and pay daycare. We don't count that in your debt to income. All I am looking at is gross income and then what's on your credit that you pay, or if you tell me I co-sign for somebody that's not on credit, I'm going to put that in there as well. But I'm just looking at debt. I'm not looking at life expenses, groceries, and all that. So I tell everybody, and if you haven't done that when you come to us, we're going to suggest write down how much you need for groceries a month. Save money for extras so that if you want to go to the movies or go to dinner, or there's an old term called house poor. And we don't ever want you to be house poor. The worst feeling you could ever have is buy a house and that's all you can do. You will end up regretting the house. The newness will wear off and you will be stuck with the debt. It's like that Lamborghini I talked about earlier. See, you were smart. You went with the Toyota first. But a lot of people watching probably went with that Lamborghini, but then now 6 months, a year later, they don't want to pay it. So make sure you know all the expenses that you pay so that you can figure out what you're comfortable paying, so that when you come to a lender and get with your agent, you know that you're not going to be house poor, right? So that you can live the life that you want to live. And you know what? Jobs come and jobs go. And I always feel like when it's your time, you'll know. And as long as you buy conservatively and not push it, right? And you make sure you can afford everything, you're going to be fine. And we'll help you with that.
Definitely. So you have any more questions for us or anything that came up in the process?
If you think about something, you'll have our cards and you can let us know. And if you think that you want to talk more about credit, just text me and I'll call you. I'll give you my card.
Thank you so much, Christy. Thank you. I really appreciate it. Thank you, Sophie. You have been wonderful. I really appreciate you so much.
This was fun.
And so I'm hoping every cohort, whoever attends the seminar, I help them through the process. They can get their home so I can help the next crew like that.